Bad news in today, we've got some data in that indicates it's unlikely interest rates are going to be cut as soon as a lot of us were hoping for. A lot of analysts have already revised their figures. The markets are pricing in the interest rates, at least at the Federal Reserve and the Bank of England, are not going to be cut anytime soon. Now, what's happened? We'll cover that in this video. When might we expect some interest rate drops? And what can you do in the meantime to protect yourself, to make sure you get the best mortgage rate, more importantly, to make sure that your costs are lowered significantly. Now, before we jump into this, as always, if you haven't subscribed to the channel, do subscribe over there and hit the bell notification. I appreciate every single one that does that. We're on the way to 25,000 subscribers now. And while you're here, smash the like button, tickle the like button, do something to that like button over there. That really helps me with the YouTube algorithm. I really appreciate everybody that does that. So make sure you do that right now. So, data's come out of America yesterday, and their inflation data is not good. Inflation has actually ticked up, which not many people were expecting. And so this is going to put pressure on the Federal Reserve to not cut interest rates anytime soon. In fact, the markets are already pricing in that the cut that was expected in June is not looking likely now. So you won't see a cut maybe till August, which will not be good for a lot of people waiting for that to happen. Now, I'm in the camp that I feel rates should go down. I feel that inflation will eventually sort itself out. I don't think these higher rates are pushing inflation down. In fact, if you look at some of the data, a lot of housing costs are included in inflation. Rent, for example, and rents are going up because interest rates are higher. So if you didn't have that, then that might cause inflation to drop significantly. But just with time, I don't feel either the USA or the UK government, and I could be wrong, you can comment on this below if you think I'm wrong on this, I don't feel that either government has any policies that are really doing much to push inflation down. And so I don't think this is that great. So USA inflation has jumped back up to 3.5%. They were doing so well on that. And so that's the inflation figure for March. How much has that gone up? 0.4%. There's a lot of stuff like insurance and stuff like that that has added to those costs. And so this means that some people are also saying that the Federal Reserve might not drop rates now until the day after the election, because what they don't want to be seen to be doing is dropping rates in order to benefit Biden. They try and stay out of the politics of stuff. So they're not going to be seen to be dropping interest rates just before voters go to the polls. And so there is an actual meeting with the Federal Reserve the day after the election, I think it is, or at least a couple of days after the election. And some analysts think that could be the first drop. Now, why does that impact us in the UK? Well, we're likely to follow the Fed. Some analysts are saying maybe we'll go first now. Maybe we'll drop our interest rates first. But normally we follow the Fed. That's what normally happens. They drop their interest rate, then we follow. And the reason for that is because our currencies are so intertwined with each other. If we drop first, the pound will be devalued, then anything we import will be more expensive and our inflation will go back up again. And so this is not a great scenario that we've got. So some analysts were predicting 4 interest rate cuts this year. That has gone. Now, that is not going to be likely to be happening at all. Those analysts that were expecting 4 are now expecting 2 in the best case scenario. Who knows when they might be? Could be August and then maybe later in the year after the election. But some analysts now are predicting just 1 interest rate cut, and that not happening until after the American election. We also have that same problem in the UK. So we have a general election coming up, and the Conservatives have got to pick a date for that at some point. But when they do that, the Bank of England, again, will not want to be seen to be being political by dropping rates before the election. Now, a lot of things that have happened recently and rates that you've seen have been impacted by the swap rate. And the swap rate is the rate that the bank gets. And if there's negative news, then they're likely to actually increase that swap rate. And if they don't feel that interest rates are going to come down, or there's no predictability on when that's going to happen, which we're kind of losing right now, then the swap rate might go up. That means your bank will get a higher interest rate, and that will get passed on to you very, very quickly. So what is likely to happen, dependent on the UK's inflation data as well, but it's looking more likely the swap rates may go up temporarily. That means offers and deals that are on the table today probably will get a little bit more expensive in the next few weeks and months until that inflation data starts coming down. Then as we get closer to inflation hitting that 2% target, as we get closer to the more predictability that the Fed and the Bank of England are going to drop rates, swap rates will start to come down, and that's what will happen. So this isn't great at all. And inflation has been really, really sticky. What this could mean, though, is house prices maybe are a little bit more resilient and just stick where they are, because as inflation is high, houses are actually going down in real terms, so they don't actually have to drop in cash terms as well to become more affordable. Inflation sticks at 3%, 4% every year. It's getting a little bit easier and more affordable to buy those types of properties. So my prediction is that I feel that mortgage rates will go up a smidge in the next few weeks. I don't think it'll be massive. I could be totally wrong. The markets are so unpredictable. A lot of you say in the comments, one day you say things are going up, one day you say things are going down. I don't normally share my opinion, but this is my opinion this time round. I feel that rates may go up, maybe, I would say, around 0.1%. So I don't think it will be loads. But if you're looking to fix a deal, I've said this on tons of videos now, I would be fixing a deal today. If you've got a deal that expires in the next 6 months, I'd fix that deal today. Then, and that's if your lender allows it, right? Some of you are saying my lender doesn't. Some do. A lot do. So go and look in the online portal for your mortgage. And if you can fix a deal today, let's just say in the next 6 months your deal expires, then if rates go up, which they might do short term, then you've got the best rate that you possibly could. But if rates go down, which in 6 months easily could happen, then in that time, if a better deal comes out, because you haven't started your new deal yet, you can swap on to that better rate before you start your new deal. That's the best advice I can give. So do share that with everyone. So this isn't great data. Where do you think the UK inflation is going to be next week? Do comment below. What do you think it's going to come in at below? Do smash the like button. Do share this video with friends and family. I think it's important to know what's going on in the mortgage market. My prediction is short term, next few weeks, you're going to see some small increases. And then who knows? It's all dependent on that inflation data. Anyway, do check out some more content on my channel. Go and watch this video right here.